There are some specific high risk areas that the SRA have been making a meal out of for the past few years, and they've been releasing quite a bit of guidance. Now, these aren't the only high risk areas where the implications of getting it wrong can be quite damaging, but these are those issues that tend to lead to residual balances, which perhaps explains why residual balances have been something of a buzzword with the SRA for quite a long time now. So these sit at the forefront of the SRA's minds. They should probably sit at the forefront of your minds too. The SRA is going to assess whether the firm has made adequate attempts to return the money, and they set out the relevant factors that they're going to take into account. So how many attempts you've made, the amount of money and the length of time you've held it, the costs involved in making further inquiries, and the likelihood of success of you making those further inquiries. So these are things the SRA takes into account. So it's the same need to record the steps that you've taken as with the smaller balances. It's just that you've got to show this to the SRA, and they're going to make the assessment of whether they think that's enough or not. So it is all pretty much business as usual. But an interesting point that the SRA makes is that it's also going to assess the proposed use of the money, evidence of fraud or disregard for safety of client funds. Now, how could residual balances be viewed as a threat of fraud or disregard? Surely if the money's in the client account, then it's safe. Well, that might not always be the case. And we've seen instances in the past where finance staff have used the existence of old unpresented items on the client account. So effectively, residual balances in hiding as a way to take money for themselves and just clearing cash that they take for themselves against old unpresented items. Okay, so it's not necessarily safe. Just because it's sitting there as a residual balance doesn't mean it's safeguarded. And what about inadequate accounting records? Again, this could be a judgment call for the reporting accountant. Would they consider the existence of old residual balances being indicative of poor accounting records?